All right, good people, another week has come to an end, so let's get jumping into the weekly recap. So this week was able to close a couple of trades in Tesla and Amazon. So two different sets of put credit spreads on Amazon, a put credit spread here on Tesla. So Tesla was a trade that we took together in the options room, and Amazon was a little bit of action I took on my own. So between the three positions that we closed, it was a little bit more than $11,000 of profits closed. So no complaints about that. Last week, I think we closed about 20. So we're rocking and rolling here. But more importantly than the P&L, which, I mean, quite frankly, is a little bit meaningless, is the structure of the trades here. So we'll talk about Tesla, we'll talk about Amazon. And I think, a couple of lessons y'all can take into your own trading. And it mainly comes down to the structure. So the Tesla trade. So we got the good looking daily squeeze. We have the positive histogram, green 10x bars. You're holding above your 21, and under the surface there was a 2-hour squeeze, a 1-hour squeeze. So that's a structure we're looking to trade time and time again. So on the 6th of April, we sold a couple of put credit spreads with short strikes at 650. And we got a pretty good risk reward. So you find that bullish structure, and there's that moment in time where there's a growing probability the stock's going to make a nice 2 to 3 plus move higher. So if you have that structure, you're stacking the odds in your favor even more. If you're basically placing a bet, the stock isn't going to fall by more than $20. So if the structure points towards the potential of a solid move, and you can get about a 2-to-1 risk-reward ratio selling a credit spread in the opposite direction, I think that's awesome stuff. So sat through a little bit of chop here, none of which, blew the structure. So you got to be able to differentiate between noise and price action that's actually changing the structure of the setup that you're trading. So Tesla never lost the structure, and you finally got the move. So this is the picture perfect example of not just the setup I think we should be focusing on trading, or at least the setup that I like to focus on trading, but a perfect example of typically where we're looking to take profits. And it's going to be at that 2+ ATR extension. So you build your position at the mean, you get the solid move, you take your profits, you move on to the next one. So that was a scoop on Tesla. And it's always nice when folks in the options room, taking the same trades, and we're all bringing home the bacon as a team. So for Amazon here, now this is the power of a lower time frame squeeze. Once a bigger time frame squeeze is fired. So Amazon over the last couple of weeks here, it's being pushed by all that momentum releasing from the daily squeeze. So once the daily squeeze fires long, and we did have a couple of put credit spreads in the options room, so we did take advantage of that daily chart. But once that energy is getting released, you want to look for lower time frame squeezes. If you can get that little break in the action where the stock is certainly pushing on momentum, but it's taken a couple of hours off to catch its breath, you get a good 30-minute squeeze, a good 1-hour squeeze, it can make a really good entry to catch the continuation of that big momentum-driven push. So for Amazon, what we ended up getting here was the 30-minute squeeze. So right before the weekend, and mind you, that daily squeeze is fired long. The Qs have fired a daily squeeze. Tech is off to the races. But what Amazon does here, takes a little bit of a breather, goes into a nice 30-minute squeeze. The 30-minute squeeze has that bullish structure. It's above the 21, a positive histogram, stacked EMA'S. So in the 30-minute squeeze, that's where I sold my put credit spreads. Ultimately, the 30-minute squeeze fires long. You get a solid 100 points of upside. And you sat through a little bit of a dip, but was able to buy back the credit spreads yesterday. So that initial push there wasn't only being driven by all that momentum coming out of that daily squeeze, but the 30-minute squeeze as well. So once the daily squeeze fires, ideally, you're positioned to take advantage of the early part of that move. But regardless, once you get the 30-minute squeeze or the 1-hour squeeze setting up, I think there's a really solid opportunity to jump into the move during that little, break in the action. Once the energy releases from the lower time frame squeeze, what you're really doing is you're just getting a good solid entry to catch that big continuation. So those are the two trades we closed this week. As far as open positions, Roku, April 30th expiration, put credit spreads with short strikes at 650. So we should be locking gains on that this coming week. Knock on wood. And APPS here is just being a pain in the ass, let's be honest. So it had the perfect structure. Daily squeeze, lower time frame squeezes, stacked moving averages, histogram positive, all that good jazz. But it's falling apart here a little bit. So what I'm doing with apps is I did decide to hold on to the position here. We got until April 30th, and just trying to be objective. And keep in mind, when you take a trade and the position starts to go against you, don't start searching for reasons to stay in the trade, because you're going to find something to convince yourself to hold on. But you do want to be a little bit objective. And being objective here, generally speaking, APPS is doing what it does. It falls about 1 or so ATR to the downside, a big ugly flush, and then it rips higher. And then it falls a good 1 plus ATR. So the 1 ATR extension here, it's kind of doing what it tends to do. So of course this totally goes to crap if we start blowing under 70. Potentially just more of the same. So if we can get a quick rebound back above the 21, we'll be in really good shape. Otherwise, have to see how APPS goes. But those are the trades we closed this week. Got a couple open positions, and then the next potential trade here I'm lining up, not just for myself, but for everyone in the options room, is the weekly squeeze here on Amazon. So I think with the squeeze in the Qs, and obviously with the squeeze here in Amazon itself, there's a potential for a good 4, 5, 6 weeks of upside momentum. So we'll talk more about that in Sunday's video. Keep an eye out for that. But until then, enjoy your weekend. I'll be talking to you soon.